Hello, ladies and gentlemen. It's investment show, The Modern Investing on Pod TV. My name is Sasha Star, and I have a guest today, Dr. Milan Sambarak. Welcome to the show, Milan.
Delighted to be here, Sasha. Thank you for inviting me.
Excellent. We might have a few more participants as the time goes by. So I'd like to know, Milan, what do you think on today's situation on the market? Which way do you think it will go? What investments you are doing these days and how it's going?
What my wife and I do, and I always talk to people about having both partners involved when it comes to investing. That's important because typically men manage the money. Typically, men die before the ladies do. So then, in addition to having to deal with the trauma of a lost spouse, they have to deal with not knowing anything about finances. So we always talk about having both partners involved, and we have a little over 300 members in our Monday Morning Millionaire Club. And we talk against the idea of picking stocks. There are two types of investment. One is rules-based investing, and the other one is judgment-based investing. Rules are always right, and there are six that we promote. One is one is save. Without saving, the other five don't matter. Two is do it yourself. You don't need to pay somebody. You're paying an advisor something like 0.5% annually, 1%. Doesn't seem like a lot. It adds up to a full year's income over the course of a lifetime of investing. Do it yourself is not difficult. So that's number two. Number three is buy the American economy as a whole, instead of picking stocks. You do that by buying an exchange traded fund which tracks the S&P 500. There are about half a dozen of them, but SPY happens to be the best. It's the largest, it's instantly filled, it has the narrowest bid-ask spread, so that's what we recommend. And that's number three. Number four is buy and hold. Do not trade. Now, we recommend that people have a 50-50 asset allocation. Something like 50-50. 60-40 is also good, and 45-55, and so on. So long as they have a lot of cash in their asset allocation with 50% in SPY and 50% in cash. And Wall Street will do everything possible to discourage that because they don't make anything on the cash portion of our investments. So asset allocation 50-50. And then the rules are number one, do it yourself. Number one, save. Number two, do it yourself. Number three, pick the American economy as a whole. Number four, buy and hold. Number four is an adjustment to number four when market movement throws off the 50-50 asset allocation. What that results in is that investors are always buying bargains and taking profits, the exact opposite of what most investors do. Most investors are losers in the market because they jump on board when the market is expensive and they run for the doors when the market is a bargain. So that is number five. Number six is avoid complexity. We cannot explain an investment to a 10-year-old, we shouldn't get into it. So what my wife and I do is we take a look at the futures for S&P 500. And if it's positive, as it happens to be now, we just leave it alone because holding a security in a rising market is better than selling covered calls on it. When we sell covered calls, which is in a declining market, when the futures market is declining, we do so first thing in the morning, just out of the money, expiring at the end of the same day. That gives the greatest percentage returns. And that's how we live. My wife and I have no other source of income except our market investments. And we're confident with what we're doing. I've been investing in the market for more than 50 years. I've made every mistake imaginable, including a few original ones I've been taking advantage of, but now I'm confident that what we're doing, as I just now described, works very well and it can work for everybody and it's not complicated. A couple of my friends, very wealthy people, they use an advisor. Why would they use an advisor whose seemingly modest fees add up to a year's income over the course of a lifetime of investing? And most people, including advisors after fees, don't match the simple act of holding the US market. Most, including professionals. So there it is. That's my take. How do you like what I said, Sasha?
I like it a lot. It's a majority of people actually. I would recommend to follow your advice because most of the people, and including even professionals, they don't know what they are doing on the market, and they are trying to get incredible results by tinkering with the different ideas and strategies and so on. But you're right that for majority of people, that's probably very sound strategy. I don't follow the strategy for certain reasons, and one of them, I'm being convinced that the stock market has a leadership for now a number of years, and it's still not going anywhere. We are talking about handful of high-tech stocks
Yeah.
which are dominating the market big time, and even if they are going down, or once of them are going down, they are going down for a short term, and then they're coming back and with a vengeance. And, the returns, if you buying and following this handful of high-tech stocks, is eclipses any return of S&P or any other similar strategies and so on. But even there, you have to be very, very conservative that once you got in the right stock selection and they're all moving higher, you know that there will be market correction. Sometimes it's a self-inflicted, like with Donald Trump, April, um, uh, really bloodbath on the market that was self-inflicted. I never mind the something like COVID-induced correction. Yeah, but still, each time market recovered nicely. How to protect yourself against these corrections is very similar to what you're suggesting. Not to be fully invested, always keep some portion of cash, whether it's 50%, 40%, but something has to be in cash. And also, what I'm doing, I'm selling covered calls from time to time on the stocks. Premiums are incredible, especially on
Yeah.
stocks like Nvidia and so on. You are collecting incredible premium, and that protects your investment, not fully, by all means, but very substantially. For example, I reduced my holdings in Nvidia. I used to have 1,000 shares, and as stock was getting higher and higher, and my profits were going higher and higher, I reduced it first to 700, then to 500,
Yeah.
and now to 200.
Yeah. Yeah.
However, I still have two covered calls.
Nothing wrong with taking profits. That's what you were doing. You're taking profits.
That's right.
Yeah.
And also, I keep keep my ammunition dry.
Yeah. Yeah.
I
Okay.
can get in. Now, on NVIDIA, I sold August 1st, 155 calls. Stock is slightly higher, 157. Yesterday it was 153. So it's still hovering about the same exercise price. But I collected $8 for each call. So
Well, yeah.
when you're talking about 155 minus 8, it's 147. So I'm fully protected against drop of Nvidia price down to 147. So it's very substantial cushion that I have. Um, and the reason that I sold some of the Nvidia stock is I'm thinking that there could be a market. mm, I wouldn't say correction. I think it will be uh, relocation of funds, because it seems to me there was a window dressing by the end of the quarter on Monday, which is June 30th, so the end of the quarter, the end of the 6 months, first half of the year. So everybody wanted to show that, yes, they have Nvidia, they have this stock and that stock, and so they were trying to show the results as pretty as possible. Now, they're not really all market participation in this run, except Nvidia and a handful of other high-tech stocks. The broader market, Milan, as you know, did not participate in that. So I would think that money managers probably would start to move money out of high-tech stocks, giants, into some possibly Russell 2000 stocks, maybe even in stocks like Alcoa, for example. It's never done great, but so on. But again, it seems to me it starts to move a little bit. Even today, I bought a few hundred shares, and I got a little bit of profit. I sold it. I don't really believe in Alcoa, but maybe there is a momentum. So maybe I'll do kind of in and out trades. And let's see if it will go down below 31. Maybe I'll buy a few more shares. Now it's 31.20 as we speak. So a little bit of more movements downside, and then maybe I'll buy a few more shares. So I'm trying to be not stubborn in the case of high-tech stocks, especially now when there could be a rotation. There could be a rotation from high-tech giants to more kind of, I would say, Russell 2000 places. So I want to see a few more days how it goes. So far, I'm doing well, and I'm taking very cautious results. The only what I increased substantially is NVDY. It's NVIDIA strategy selling covered calls, and I've substantially increased that because of the price of NVIDIA. I think that they're going to have very, very good reporting in 2 weeks. So that one I've increased, and it's doing very well.
Now, why wouldn't you, instead of picking individual stocks and trying to beat the market that way, why wouldn't you take the whole market, which JP Morgan was asked at the end of the 19th century what the markets will do, and he said they will fluctuate. He really should have said they will fluctuate as they continue to rise. Every market decline since the market was first launched more than 400 years ago in Amsterdam, every market decline was followed by a recovery and continuing rising. And that's not going to change. So owning the whole market doesn't require you to make any decisions. Pick the American market as a whole, and you're going to be safe. Now, yeah, there will be losers in that American market, unquestionably about that. But take a look, let's say, at the strongest economy in world's history is the United States economy today. Would you be okay with that statement?
No.
Well, let's say it's a very strong economy.
It's a very strong economy, but it's unraveling right now.
Okay.
Thanks to Donald Trump, to interest rates, to US dollar is going down against all currencies except maybe Canadian dollar.
So are you saying that this time is different?
Yeah. Yes, this time is different because from this debt of $37 trillion, there is no remedy how to get out of it. And even whenever Elon Musk was trying to do certain things to at least, if not reduce it, at least not to increase it. And even that didn't work out. And they're going with new beautiful bill, which will increase $37 trillion to 40, maybe $41 trillion, and there is no end to it. So there will be very soon a shortage of countries which are willing to buy US debt. And once that's happened, US will have to increase interest that they're paying on its debt. And that will not bode well for stock market, for economy as a whole. And I really don't see any bright sides on that.
I sent you an email recently
Yeah,
showing that the countries which don't participate in owning the American economy in their sovereign wealth funds are three, and they are Russia, uh, surprisingly, Australia, and I don't know if it's Vietnam or three countries do not invest their foreign sovereign wealth funds in the United States. All the other ones do. All of them.
you
What is
realize that this is outdated information. It's not today's information. It's statistics brought from years ago. Today, dynamic is very different. The countries are dumping US debt, not buying, and that will not bode well neither for US economy
that's
nor for US market. And don't forget the tariffs.
that doesn't uh, wasn't the case when I checked as recently as yesterday.
Yes.
Sovereign wealth funds are still going into the United States market, and you're saying that's not going to continue. You know, when you take a look at the United States market, you said it's not the strongest economy. Let's say it's a very strong economy. You'll agree with that.
Yeah.
And then if you walk down the main street of the United States, any town, main street, nobody on the main street is making money except the banks and the occasional professional who might be there, say a lawyer and a medical doctor. So everybody else, the women's clothing stores are all losing money. Most of the restaurants are struggling. The gift shops are having a tough time. Nobody's making money in one of the strongest economies in history. So we can live with that. Yeah, the American economy has been that way with nobody on the main street U.S. making money except for uh, the banks and a few professionals. It's been
So,
like that for years, and that
so
doesn't seem to matter.
So
Remain,
you're saying that most of the people are losing money, but U.S. economy as a whole doing extremely well. Is that your point?
yeah, yes, yeah.
And then what there is to it? So there will be more and more people joining unemployment lines. So there will stop spending money, and U.S. economy is all based on people spending money. If
Yes.
people are not spending money, it will go down and very quickly.
You know, Sasha, there's something that we have not discussed, and there's probably a historical record we should look into it. But there's
Okay.
a very strong argument, I think, to be made uh, for guaranteed annual income. Somebody will abuse it. If a system can be abused, it will be abused. But you know, in Canada, you used to get the baby bonus, didn't you? And did you need it? You were getting it. Nobody asked you how much money you were making, and so on. You got it. So, well, that's a form of guaranteed annual income. So, suppose that we have a guaranteed annual income that applies to everybody, regardless of their income level
In U.S.,
in Canada and the US, anywhere in the world. Suppose that we have that guaranteed annual income, which will allow an existence, allow them to buy groceries and pay the rent, but not live comfortably in it. So they still are motivated to look for work. And you know, with the changing environment today, many people are not going to be able to get a job because as the internet world expands, only knowledgeable people will be able to get a job, and many just don't have what it takes to participate in that economy. So, giving them an annual, guaranteed annual income, the way you and I got a baby bonus, which we didn't need, would prevent that. And so, probably there have to be some historical examples of whether guaranteed annual income would
but
work.
that's unrealistic in United States for sure. So in Canada, it's just unrealistic, and I don't think that you should fool our audience with the thoughts of guaranteed income. There will be no such thing. Unemployment lines, yes, that's what guaranteed, nothing else.
And why do you say that if you and I got the baby bonus,
Yeah.
and I think there's the equivalent in the United States. Why do you think that a guaranteed annual income, which is a variation of the baby bonus,
No,
would?
it's not. It's quantitatively absolutely different animal from baby bonus. We are talking about some what $29 a month or something. With annual income, you're talking about 2,900 a month. It's different exercise altogether.
Oh,
And
that,
no government of US and even in Canada cannot afford it, and US, by the way, cannot afford it. So it's not going to happen.
well, you could be right. Yeah, you could be right. Right is your middle name. Now, you're talking about it's different this time. You know that analysts and investors have frequently stated it's different this time when there is a market change that's sharp. So, for example, here's some examples of what you have: the dot-com bubble, for example, the housing boom in the mid 2000s, the crypto surges, AI-driven stock rallies, all those. It's different this time. Uh, Kenneth and Rogoff published a book about 19 years ago called "Is Different This Time, or Is It?" And they showed that in over 400 years of investment history, it seemed different this time in the short term, but in the long term, it never was, because the basic ingredients, which are fear and greed, have always been in place and will always remain in place.
It would
So,
be very interesting to see what Kenneth Rogoff, who is, by the way, international grandmaster in chess, what he would be writing today, whether it's a different this time. I
well,
would
a couple of things. I didn't know that he was a chess grandmaster.
ask him.
I knew that he was an economist. And what
Yeah,
would he say today? Yeah. Has anybody asked him what he'd say today? They should.
but
Has anybody asked Rogoff what he would say today?
I'm not aware of it, but it would be reasonable that somebody would ask what he would. I don't think that he, by the way, do you know that he's also president of International Monetary Fund? So I don't think he's in a position to freely voice his opinion because there are too much responsibilities that he has. And therefore, I don't expect him to do so. But if he would, remember at the time when he wrote these books, there was no $40 trillion worth of US debt.
Oh, that's awful. That is. The
So
U.S.
this is alone, with all other things being equal, that alone makes all the exercises of believing in US economy and it's going to do this and that, it nullifies it. It completely destroys all arguments in favor of US economy right away, right there. And it's increasing, it's not decreasing, right?
Yeah, you're right. You're right. No, the U.S. economy, the debt level is worrisome. It's something to worry about. The U.S. has never defaulted on its debt as many other countries have. But will it? Will it be able to continue to service its debt? Now, before the show, we talked about the fact that the U.S. has a military presence in every country in the world except North Korea and Iran.
And there is also Russia and China.
Oh, okay. So a military presence in the United States is enormous. The interest on their debt is greater than the cost of their military. Annual interest on that debt. How long can that?
Well, if it is military, you can, under certain conditions, you can decrease the size of your military and try to save some money. I'm a strong believer that all U.S. needs maybe $50 billion defense spending, where U.S. will be protect itself against Canada and Mexico, and there is no reason for them to keep their forces all over the world. I really don't see any reason.
That's right. You can decrease it, but you cannot decrease the level of the debt.
That's a problem. There is no easy solution. Maybe there is no solution, period. So the debt will keep increasing.
Well, there is a solution. The solution is lower benefits and higher taxes.
But they're lowering the taxes instead of hiring.
They're lowering the taxes on the mega wealthy. The billionaires are paying less taxes than you and I are. Yeah.
But that's where the money is.
Yeah.
That's where you have to increase taxes, not against people who are going from paycheck to paycheck, but for the wealthiest people, for 1% of the wealthiest people in the country. That's where the money is. You know the old story when there is a um, court proceedings against man who robbed the bank, and the judge asked him, "Why did you rob the bank?" And he
That's
said,
where the money is.
"Because that's where the money is." That's it, right?
Well, are we in a situation that was similar that preceded the French Revolution in 1789? Are we facing a similar situation?
I'm not sure. France didn't have $40 trillion worth of debts at that
They,
time.
they had a very high debt, and a very small number of people lived extremely well, while most people actually starved. Many people didn't have enough food to eat when Marie Antoinette said, "Let them eat cake."
Yeah,
Yeah.
yeah, yeah. It was a situation like that. Well, in the United States, people are most of the people are ignorant, and they don't care about the U.S. debt. They care about that they will have a next paycheck and they'll be able to buy food. And these people will continue to prepare for this.
Sasha, what you say is correct, but shouldn't the decision makers care about the debt?
They don't care about the debt. They care about their own pocketbook. That's all what they do care.
It's just,
And it applies to president. It applies to congressmen and to senators. All of them, they care about their job. They want to keep earning $175,000 a year as a senators and free parking at the Dallas airport. That's all what they care. Nothing else. Trust me.
how sustainable is that?
It's not very sustainable at all.
Where will that lead to? What will that lead to?
The collapse, market collapse, number one, the whole economy, there will be unemployment lines, and it's not going to be very pretty. And nobody is going to help America at all. No one, no
Well,
chance.
nobody's in a position. And as I mentioned earlier, the way to solve the problem is higher taxes and lower benefits. Nobody's going to like that, but that's the only way to reduce the debt. Raised
Okay,
income.
you reduce the debt and you lose your jobs. Is it good outcome for you? No. So you have to keep your job number one priority. And number two, whatever economy, okay, it will do well, great. It's not going to do so well. Okay, well, you have occasional hiccups in economy. So that's what happened. We're not responsible for that. So
Well,
this
we
is,
both agree
and
that
don't forget tariffs. Tariffs have not been placed yet. They're not being absorbed by all the reportings about unemployment, about PPI numbers, and so on. It's not there yet. It's going to be in the next month or two, and you will see market reaction to that. This is
you know
why
that
I'm very cautious.
economists universally agree that tariffs is not a good thing to have. Tariffs are not good, except if you're trying to protect your own economy, some aspects of your economy, say fishing or mining or forestry, and you introduce tariffs on foreign imports to protect your own economy. That's maybe justifiable. But the way that Trump is introducing tariffs is making him a lot of enemies. And I'm happy to say that when you look at the number of Republicans who used to be his friends but no longer are, that number is growing. And that's encouraging. A lot of people are not happy with Trump, and that number is increasing.
Milan, I would like to ask you a very simple question. What's happened in one day, let's see, a week, 2 weeks, 5 weeks from now, all European countries plus China, they will unload US debt and ask US close all their embassies in China and Europe, everywhere, and just go and take a hike.
What will happen?
Think will happen to US economy?
Well, I frequently mentioned that empires have a 100% failure rate.
Yeah.
And America is still not facing a failure. Like I mentioned, most sovereign wealth funds are still investing in the United States. You say that that's changing, but the American American empire will fail someday. Unquestionably, that's a historical fact. All empires have a 100% failure rate. Is America facing that?
Yes, absolutely. With its debt, and there is no resolution. You see, the debt is, first of all, it's enormous. $37 trillion never happened in history. But if there would be some steps that would try at least keep it that way, and maybe even slightly reduce, maybe $1 trillion a year, okay, so it will take 37 years. But still, it could be perceived as at least moving in the right directions. But that's not going to happen. It's going to be increased to $41 trillion. And then where are you going from there? I think that if you will,
Where we are in any aspect of our lives is not nearly as important as the direction that we're moving in.
okay,
Is the United States moving in the right direction?
in the
With the United States debt, is the handling of the American debt moving in the right direction? Why are the leaders not concerned as they should be?
I've already explained they don't care except their jobs. They don't care nothing in this world except protecting their jobs. That's very simple.
Yeah.
And I think it's a right answer.
Yeah.
I hope I didn't discourage you for continuing investing in S&P 500 and enjoying your strategy, and hope it will still work for some time. But I would not bet any money on it, and I will not follow that strategy. But this is my decision.
Well,
And
I only minimally care about what happens after I die. I am concerned about my children and my grandchildren, but as long as I'm alive and doing as well as I'm doing now, I'm happy about that. People who have bought, historically, the American economy as a whole have earned about 10% annually, not inflation adjusted, about 6% annually, yes, inflation adjusted. And everybody, knowledgeable people, tell us we should live on 4% of our savings. So if you're making 6% and you're taking out 4%, you should be all right forever. So that's going to be okay. I am concerned about our grandchildren for three reasons. Number one is nuclear weapons. Number two is climate change. And number three is artificial intelligence. And any one of those could wipe out humanity. And, I have a list of laws, Sombrex laws, they're called. One is after the third glass, all wine is good. And another one is if something can happen, sooner or later, it will happen. So think of that: nuclear weapons, artificial intelligence, and climate change, any one of which could wipe us out. And our grandchildren are facing that, aren't they?
have no problem to agree with you fully on that one. And hopefully it will not happen in our lifetimes, in our children and grandchildren's lifetimes. And with that, I would like to thank you very much for today's program and wish you happy trading. Well, tomorrow is a short day in US and Friday is a free day, so we can relax a little bit. And then we'll see you next week, same place, same time. Thank you very much.
Looking forward to it. Thank you for inviting me.
Thank you.